Good morning and welcome this morning to Trading with Technical Indicators, another great webcast from Schwab Coaching. My name is Ben Watson. I'm an education coach and senior manager here at Charles Schwab. And I'm joined out there in the chat today by my good friend Connie Hill, 20-plus year veteran of the financial markets, and a great technician in her own right. She's going to be there to help answer your questions along the way. And we're going to talk a little bit about maybe from a different perspective, this idea of technical analysis and trading with technical indicators. I know that James talks about this particular webcast and teaches this webcast on an ongoing basis. Consider this one to be a little bit of a one-off. My thought was in teaching this webcast today, the opportunity perhaps to take any technical indicator and put it perhaps to a bit of a litmus test, if you will, or at least put a checklist to it to determine whether or not we actually have a signal, right? That becomes kind of a critical importance when we're talking about trading with technical indicators, because one of the challenges is always, what is the signal and what's it telling us, and is it reliable? So we'll kind of work through some of those issues here, but a couple of the things that I want to talk about before we get started, a couple of quick housekeeping items are these, namely the fact that everything we talk about is simply for illustrative and educational purposes only. Another thing we talk about is should be considered to be a recommendation. Remember that if you're going to trade options, options carry a high level of risk. They're not so suitable for all investors. Make sure that you are aware of the characteristics and risks of standardized options before considering any option transaction. Now, there are lots of different ways to look at the market: probability analysis, fundamental analysis, technical analysis. Technical analysis is only one of them. And all of those are theoretical in nature, including technical analysis. So Schwab doesn't recommend the use of technical analysis as a sole means of investment research. Now, we're going to be using the Thinkorswim desktop software platform today, specifically the paper money version. It's not a guarantee of future success, but it's a great sandbox, especially if we're doing something like we're doing today in evaluating technical indicators and technical signals. Now, this is another important thing to consider. Past performance is not a guarantee of future results or success, and the market can have volatility and it can move regardless of what the technical indicator says. So news happens. So we're going to talk about that. Now, that being said, as we get into this discussion, again, welcome to all of you for being here today and for joining me. Whether you're watching in the live version or in the recorded version, we're glad to have you here with us. Now, here's what we're going to do. We're going to talk a little bit about some of the principles of technical analysis. We're going to talk about technical indicators, and we're going to explore indicators and examples on the chart. Now, one of the things that I do on a pretty regular basis, and I'm going to pop over here to the Thinkorswim desktop software platform. Actually, before I do that, I'm going to pop over here to our Schwab coaching site, and I'm going to bring up this link right here. So this is schwab.com/coaching. And I'm going to go to in-person events. And the reason I bring this up is on a fairly regular basis, and in fact, coming up on the 11th and 12th of April, I'm going to be teaching a workshop, a live in-person workshop called Technical Analysis and Option Strategies. And the first day of that workshop is all about the understanding of technical analysis and understanding the components of technical analysis that make technical analysis an important and effective tool for making trading decisions. So I'm just going to ask a real quick question out there in the chat, and you can answer at your leisure, but whenever. Just how many of you find that you have a difficult time making a decision about entry or exit? Okay, just the answer. Do you have a difficult time making a decision about entries and exits? Okay. Now, Mike, this is not online. This is live. You can join us live for these events. They are at no cost to you. Next time we're teaching it is in Detroit, and then we're going to be in Denver in May, and we're going to be doing another of the technical analysis workshops in Santa Clara in July. So lots of you are saying, yes, you have a hard time making decisions. So what I'm going to do is I'm going to pop over here to the Thinkorswim desktop software platform. And we're going to just take a look at how we might bring this, hopefully, to some understanding when it comes to technical analysis. And a lot of traders, because of those difficulties in making decisions about entry and exit, are driven to technical analysis, right? Because it suggests a point at which we could enter the trade. It answers or attempts to answer some of the question when to trade. Fundamental analysis maybe gives us an idea of what to trade, what stocks to look at, those types of things. Fundamental analysis is theoretical as well, but technical analysis we look to oftentimes to make a decision about when to trade, when to get into the trade, when to get out of the trade, right? Those entry and exit decisions. But then what typically tends to happen, beyond just looking at the chart, because this is price, right? That's all we're seeing here on this particular screen right now. And remember, this is simply for illustrative and educational purposes only, okay? This is price. And from a technical analysis perspective, we could make a reasonable entry and exit decision based solely on what's going on with price, right? Price breaks above a previous high, that could be an entry signal. Price breaks below a previous low, that could be an exit signal, right? But from a technical analysis perspective, we seek to make things better. We seek to make things maybe a more optimal signal. But therein lies the problem. So let me ask you this. For those of you who expressed that you have challenges in making entry and exit decisions, how many of you have on your chart more than 5 different technical indicators? Anybody? Does anybody have more than 5 different technical indicators on your chart? And don't be afraid. I mean, there's no judgment here. This is a judgment-free technical analysis zone. Okay? Now, the reason I ask that is because when you start getting multiple different technical indicators on your chart, rather than being helpful, oftentimes what happens is having multiple technical indicators tends to create ambiguity in the signal, right? So we have to kind of strip things back, right? And 4, 2, great. Okay, cool. That's fine. What I want to do, yes, Art Vandelay, perfect. Analysis paralysis. We tend to, from a behavioral finance standpoint, we tend to try to optimize or satisfies, which is find something that's satisfactory. And then we end up making decisions or not making decisions, right? Because we don't have a clear signal. We don't know what that signal is. And then we blame the signal. So what do we then typically tend to do? We typically tend to go in search of the best technical indicator out there or something that is better, right? And so we cast our net far and wide. And I just want to do this really quickly because I think this is really interesting. I just opened up the chart studies, the edit studies Flask icon here on the chart on Thinkorswim. And this is just a 1 year daily chart of price action. It happens to be Kroger, not for illustrative, not for any kind of recommendation, simply for illustrative. And I'm just going to start scrolling down through this list. These are all the technical studies. These are all the chart studies that could be applied to your chart and then some, right? Because I've already created some of my own. And you notice that I'm scrolling down through this list, and as I'm scrolling down through this list, there's a lot of different technical indicators on here, right? In fact, there are over 400 and almost 500 of those technical indicators, right? And so I'm scrolling down through this list, and I'm still talking, and I'm only in the D's, and I'm still talking, and now I'm in the E's, and there are tons and tons and tons of them. So I could keep going like this for a long time. And you see that I'm only about a third of the way, maybe a quarter of the way down through that list. And if I were to scroll quickly, I'll just grab the slider here, and you can see I can scroll down through the list. And I can scroll all the way through these lists, and I can just throw a dart at one of these and say, this one, I'm going to use this one, right? Or I'm going to use this one, and this is going to help. How do you choose? Number one. Number two, how do you make sense of all of these different technical indicators? And the thing about it is, there are a lot of reasons why so many different technical indicators exist. Not the least of which is this. Connie, I'm gonna call Connie out here for just a second. Connie has a designation after her name. It's 3 letters. It's CMT. It is Chartered Market Technician. Okay, Chartered Market Technician. Lock, that little lock right there, that doesn't mean you're locked out from using them, Brown Buffalo. That means that the code behind them is something that you can't edit, right? You can't edit that code. Now, you can take that code, you can put it into a ThinkScript. Michael Fairborn teaches a ThinkScripting class on Friday afternoons, but that lock just simply means you can use it on the chart, but you can't adapt the code, or it's not something that you've created to adjust, okay? So, yeah, Connie has a designation called Chartered Market Technician. And Connie, in order to get that designation, had to go through 3 levels of tests. And I think it maybe has changed, but I know it was this way when I was starting to work on that and when Connie was working on that. And one of the ways in which you could satisfy the requirements for the Chartered Market Technician 3 test was to create your own technical indicator and defend it. And so that is one of the reasons why there are so many of these technical indicators here in the Thinkorswim platform and available. The other reason is that if you create something and maybe you've taken a technical indicator that somebody else has used and created, and you tweak it a little bit and you change it and you say, hey, this is the best, then you can sell your book and you can sell your website and your newsletter and all of those other things, right? So there's kind of a greed perspective, right? Yeah, you do have to be sponsored to be a CMT, right? You have to be sponsored by another CMT. Okay. Yeah, you're right. Rich Ricebird, it could be a lifelong pursuit, right? Okay. Yeah, there is a implied volatility. There is a study for that as well. So I just wanted to give you guys a little bit of a perspective here. I am probably the last person, maybe Connie second to last. I'm probably the last person that will tell you that there is one single best technical indicator, because there's not. There are a lot of different technical indicators because the market is dynamic and the market reacts to different things, and there are different ways of looking at the market. And because you look at things differently than how I look at them, there are different ways to evaluate the market. And if there were just one best technical indicator, then guess what? Everybody would be using it, and eventually you would have market movement grinding to a slow ceasing slog, because there'd be no difference in decision making. But everybody's got a difference of opinion. So that's what we're going to do today, is we're going to kind of take this from this perspective. And so what I want to do, I want to cancel that. I want to bring up my my left-hand side menu here. And I wanted to talk about, because somebody had asked me, can we see this checklist idea? So I put together 5 ideas. Yeah, everybody's looking for that crystal ball, Ricebird. I put together 5 ideas that I wanted to go through in evaluating technical analysis or trading with technical analysis that might help us to make decisions about using a particular indicator, or more importantly, if we've decided on a particular technical indicator or combination of technical indicators, a way to kind of run through a quick checklist to say, is this signal a valid signal? Is this something that I should do something about, right? Because sometimes we get technical signals and we say, oh, because of this or because of that, I'm not going to take that trade. And then we kind of get reductive about that, and we say, well, I don't know when to take a trade because I don't know if I should be picking this signal or if I should not be picking this signal. So I kind of wanted to kind of provide some clarity, some resolution to that problem. So there are 5 things that I wanted to talk about. Indicator reliability, right? Indicator reliability. Is this an indicator that gives us reliable signals in the market conditions that we're in, right? So that's the first one, indicator reliability. The second one is confirmation. Is there confirmation from price action? Is there confirmation from another technical indicator? Is there confirmation from something like multiple technical indicators? trend alignment. Is this indicator, is this technical indicator, is this combination of technical indicators giving me a signal that is consistent with the trend direction? So if I've got buy signals that are coming as the stock is moving in a downtrend, is that really an aligned signal with the current trend of the stock? Or do I need to change things perhaps, or look at another technical indicator? So trend alignment is the third of those steps. Now, signal strength. And this goes back to kind of one of the things that I was asking at the very beginning, right? How do you, if you've got lots of different technical indicators, how do you get out of the conundrum of, well, this signal is sort of strong, but this one's not quite so strong, so which one do I choose? So we're going to look for clear and consistent, strong signals, ones that we don't have to squint at in terms of making a decision, right? Is it solidly a signal, or is it just barely? Maybe if I have to look at it the right way and stand on my head and hold my arm out, is that a signal? And then the last one that I wanted to bring into this mix is market events, like news, right? So things like earnings announcements or economic events that might have an impact on how we evaluate that technical signal. Now, that's more exogenous, right? That's more external to the market than it is about the signal. So maybe 4+1, right? Indicator reliability, confirmation, trend alignment, signal strength, and then market events. And Brown Buffalo says the current market really makes it tough. And you're exactly right. That's why I'm talking about this today, right? Okay. So, and yeah, there you go. Connie defended the RSI, right? Yeah, Thea, that's a great point, right? Main indicator to make more money in the market is the number indicator that is in your bank account. Sure. Money attracts money. You got to have something to start with, right? And then you make valid decisions. So let's do this. So one of the things that I teach in the workshop is the idea of identifying trend, right? So let's take this from a trend perspective, first of all. So this is Kroger. This happens to be one particular symbol. I've got a couple of others that I want to look at, but this is an uptrending stock. And I can make a decision about this being uptrending, or I can determine whether this is uptrending simply by saying, hey, I can see that it's making higher highs and higher lows as it goes up, right? I can draw those in. Higher highs, higher lows, just about to make a new higher high there, but it's got a higher low. So this is higher highs and higher lows. So this is an uptrend, right? And then the next thing that I can do is I can simplify or automate that process, right? Of identifying higher highs and higher lows by putting in something like a moving average. Now, I'm going to grab, in this particular case, I'm going to grab my Flask icon here, and I'm going to put on here a 40-period moving average. It just happens to be the system that I'm working with right now, 20 and 40, but I'm just going to show right now the 40-period moving average. And I'm going to click on Apply. And I'm going to put that 40-period moving average on here. So if this were a 40-week chart or a weekly chart, this would be 40 weeks. If this were a monthly chart, this would be 40 months. If this were an hourly chart, this would be 40 hours. It's fungible across those different time frames, right? So here's a 40-period moving average, and I can see by looking at that moving average two things. One, that price is generally following that direction, or the moving average is following the direction of price. So I can see that I'm in kind of a long-term uptrend, right? I can see that by the moving average, by the direction that it's moving. So that's kind of that first kind of signal reliability, right? Price is moving higher. The signal in this particular case of this 40-period moving average is giving me a reliable signal that price is moving higher. That's kind of using that checklist in its first sense. So indicator reliability. Now, the other thing that I want to do, the next thing that I want to do is I want to confirm this signal. Okay, so what am I going to do? I'm going to use maybe something like price action. Well, I already kind of did that with higher highs and higher lows, but what if we were to add another technical indicator on here as a confirmation, right? So what could we use as an additional confirmation to a 20-period or to a 40-period moving average? Well, maybe something else that was giving us a trend direction indication. So I'm going to go up here to my technical studies or my chart studies icon here, that little Flask icon, and I happen to have a slower moving average, actually, I'm sorry, a faster moving average in this case, about half the time frame of my first moving average. And I'm going to show that one. And so this is a 20-period moving average. And I can see generally that that's following along with price as well. So that's giving me some confirmation. So I've got indicator reliability in the time frame that I'm looking at, a 1-year chart. I've got confirmation. I've got a faster moving average that's moving in the same direction. I could do something else, right? Right? I could do something else. Now, that's a good question, Mike. Do we want each indicator to satisfy our criteria, or are we looking for the aggregate? So when I'm making a decision about indicator reliability and confirmation, I want to see that I've got generally consistent. I don't want to see that I've got necessarily a 20-period moving average that's moving significantly lower and a 50-period moving average or a 40-period moving average that's moving significantly higher, right? That would give me an indication that maybe there's some divergent signals. Now, moving averages are generally going to follow along unless you've got shorter term divergences. But I wanted to use this as kind of an illustration. Now, when we start comparing a moving average signal to something else, like an oscillating signal, like AJ is pointing out, that's when we have to kind of make a decision, right? Is there a divergence that's happening? And is that divergence a significant signal in and of itself? So here's what we've got. Indicator reliability. Yeah, these are pretty reliable, right? Moving averages are following along with price. Confirmation. The two moving averages are kind of moving pretty closely in terms of direction to one another. Trend alignment. Well, we had already decided by looking at the highs and lows that this stock was moving in an uptrend. We could see that with price action. Are these technical indicators right now giving us a signal that is consistent with the trend of the stock? And the answer to that might be yes in this particular case. So the next thing we might think about here is signal strength. Now, you're right, Art Vandelay, absolutely, great question. Confirm using a shorter time frame versus just daily. So we're going to add that into this mix. So we might add into this, when trend alignment, multiple time frames, right? Multiple time frames. Is that trend still moving in a bullish direction? So for when we start to make a decision, we might also, and some traders do, look at a shorter time frame. So maybe we pop down into an intraday time frame, a 5-day, 15-minute, and we say, all right, is the trend of the stock in this shorter time frame doing the same thing that the trend of the stock is doing in the longer time frame? And the answer here, I think, is yes, right? We're making an uptrend, right? Moving higher, higher highs and higher lows in a shorter time frame, as well as seeing that happening in the daily time frame, the 1-year daily time frame. So that's a great point, Art. Thanks for bringing that up. Trend alignment over multiple time frames, right? Now, the next thing that we might want to think about here is that signal strength. What's the strength of the signal that we're getting? So let me just ask this, right? So think about this. I'm going to grab my magic marker, and I'm going to say, if our signal is price, or the moving average, the faster moving average moving from below to above the slower moving average, an example that might be here is a signal where it's maybe bouncing off of each other instead of crossing below and above. Which of these two signals, I'll label these 1 or 2. I'm just going to ask you, which one is greater? 1 greater than 2 when it comes to signal strength, right? 1 greater than 2 when it comes to signal strength. What do you think? By the way, speaking of what you think, you have an opportunity to share what you think with me by clicking on that feedback survey. Connie's got it there. She's reposted it. She'll put it up at the top of the chat as well. And she will post that up there so that you can fill that in. All right. So it kind of touched too, right? They kind of came close together. See, this is really interesting because now we've got a disparity of opinion, right? So I would probably argue, in terms of strong signal, right, in terms of a strong buy signal, that 1's probably greater than 2. But you can see that, right? You can see that strength of signal. You're not trying to squint at it and say, well, did it get to that point and cross over, or is that a weaker signal, right? Now, this may not be the best example. This is simply an example of this signal strength, right? Crossover, and you have to decide this. This isn't me. This isn't Connie. This isn't James coming to sit next to you, right? And say, this signal's better. Take that signal. You have to make that decision yourself, right? In the cold, hard reality of you sitting there at your screen. So if you were going to look at this, and you notice that I didn't tell you that there's a right answer or not, but you might determine that 1 is greater than 2. For some of you, however, 2 might be better than 1, right? So here's the thing that we might think about. You have to determine what is a strong signal. For me, that stronger signal might very well be this actual crossover where price is pulled back a little bit and you see the moving average moving below and then back up above. So I would perhaps argue, but I'm just me, and this is not true of every trader because I don't know every trader, but I would perhaps argue that 1 might be a stronger signal than 2. A crossover might be stronger than a bounce or a kiss or, that type of whatever you want to call that technical indicator. So that's the next part of this in terms of signal strength. Now, the next thing that I want to think about in terms of this process, and this was kind of where I said 4 plus 1, is there a market event? So we're past an earnings announcement. I don't have an earnings announcement coming up. These signals occurred kind of in between the earnings announcement. This signal does not come as a result of that earnings announcement. Now, there's other kind of exogenous news events that might be an issue that you might take into account. And Mike asks a great question here. Mike says, do you find that some symbols work better with some indicators and different futures products or different charts, since I talk about all of those? And the answer to that is yeah, absolutely. Right. So there isn't, like I said, there's not one best indicator, and there's not one best indicator that fits for everything. There's not one universal indicator. Okay. So that's that perspective. All right. So now what I want to do, I want to kind of carry this over a little bit. So I've got a couple of other stocks that I want to look at really quickly. And I've just put them up here. And I was using Kroger because it was the uptrending stock. I'm going to use UPS next. Okay, we're going to keep the same set of signals here, the same set of indicators, and then we're going to start to add to it a little bit. I'm going to indulge Connie's RSI proclivity here in just a second. But let's take a look at a stock that is moving down. Let's take a look at UPS. So UPS is in a downward trend. We can see that clearly by lower highs and lower lows, right? We can also see that by the consistency of this technical indicator. But we have the 40-period moving average, that's the blue line, continuing to move down. And we have the red line, the 20-period moving average, continuing to move down. They're moving in a consistent trend direction. And now they're kind of swirling up here, right? Price is kind of moving sideways. These are getting a little bit closer. This is kind of where I'm getting to again with that trend, that signal strength. Now, here's the reason I'm bringing up a downtrending stock. Not that we would necessarily go short the stock, but some traders, and we're not going to do it in this particular class because we're going to focus on the technicals, but some traders might use these bearish signals as bearish entries into, say, for instance, an option trade. But I happen to notice a couple of things going on here when it comes to this one right here, which is signal strength, right? I don't know. Is that a strong signal? I mean, we had a little blip and then it moved, and we had this move to the downside, and then it started to rally. So the question is, do we need something else in this mix? We've got another signal right here, which is a little bit of a crossover. They're moving consistent with the trend direction, so they should be valid signals, but they're not giving us big, strong signals. We kind of have to squint at them a little bit, right? So maybe this is where we need some additional confirmation. Now, before we get to that confirmation, I want to talk a little bit more about a couple of other different trend directions. So let's take another one here. Let's take eBay. And I'm going to pop eBay in here, EBAY. And ask yourself, when was the last time you talked about eBay, right? So eBay's generally been moving up and kind of going sideways. I left some lines on here. I was going to take those off, but let me remove those really quick. All right. So eBay's generally been moving higher, kind of moving sideways over this last little time frame. And the reason I bring this up is because we had a crossover and a crossover and a bounce and a crossover. In that sideways trend, moving averages tend to work a little bit less reliably. And they're not as consistent with our trend alignment. And if we go to a multiple time frame, we go to that 5-day, 5-minute, we can see that eBay is also going sideways in that multiple time frame perspective, right? Kind of going sideways, and you can see the number of whipsaws. That's the challenge with something like a technical indicator like a moving average. It can be subject to those whipsaws. So now we got to do something maybe a little bit different here, right? We'll put this up back on a 1-year daily chart. So now we got to do something a little bit different. We've got to make a decision about these signals. Are these signals valid signals? Is it going sideways? Is it consistent with the trend alignment over multiple time frames? And do we have a strong signal? And I would argue that the answer is no. So now we got to go back to this confirmation, right? Because we've got indicator reliability that's maybe in question. We need some confirmation here. So what I'm going to do in this particular case, to Doug's point there in the chat, is I'm going to come up here to my Flask icon, and now I'm going to add in there something like an oscillating indicator, okay? And it could be any oscillating indicator. The one that I'm going to choose happens to be, in this particular case, the RSI, the Relative Strength Index. Connie has taught this. I've taught this. You've seen this taught multiple times. Not saying that it is the best by any means. It is a technical indicator that can help us, right? Okay. So I'm going to open up the eyeball on that one. We're going to show it. Click on apply and okay. So now here's the real challenge, though, because what I notice here is when the stock is kind of in this trending time frame, right, when it's making higher highs and higher lows, RSI is generally staying to one side or the other. But when the stock goes sideways, if we were just going to kind of zoom in on this time frame here on the stock, we're not really getting much of a signal confirmation out of the RSI, right? That RSI is kind of going sideways, isn't it? So, that would maybe tell us that an oscillating indicator, if we were going to build a technical analysis system, that a moving average and an oscillating indicator are probably not very effective when a stock is moving sideways. Okay. Well, let's go back to our uptrending stock and see if maybe that gives us a better indication. So now notice that here's our uptrending stock. It's been moving higher. That RSI, or that oscillating indicator, generally in this particular case, kind of staying up above that level. So what I'm going to do really quick in showing this is I'm going to draw in this 50% level. I'm going to grab my drawing tool. I'm going to come over here to the 50% level right here on the left-hand side. We're going to draw that back to our 50% level right here. There's that 50% level, okay? And I've just drawn that in there. Some people have scripted that. I know Michael Fairborn has taught putting a center line on an RSI study. That's part of the Think scripting capabilities. But now, if my confirmation signal was this, right? The RSI was above the 50% level, and we got a crossover. So let's now start lining out where some of those signals are. So here we have a crossover with the RSI above the 50% level. That's a strong signal, right? That confirmation gives us the idea that that signal may have more weight relatively than a signal where price is crossing over and the RSI is below the 50% level, right? Below that midpoint of its range, right? So that might be an effective way to help add to this mix. But then that begs the question, right? And we can even do the same thing. Let's kill this annotation here. And we can even do the same thing in that shorter term time frame, right? So if you're a shorter term trader, you can use the same perspective, right? I remember we had that trending indicator and we had that crossover right here. This is a 5-day, 5-minute chart, crossover. Those are all strong signals. Now, do we have a strong reversal signal? Potentially, right? But now the question is, well, wait a second. How do we determine what the strength of the trend is, right? So let me ask you this. And wow, this is taking, okay. So let's talk about this. Because Siri asks a question, RSI below 50 means bearish. Well, think about this. RSI above 50 would indicate that there's bullish sentiment, right? RSI below 50 indicates bearish sentiment. Doesn't mean that the stock is bearish. It just means that there's maybe a little bit less of a bullish push. So what I want to do is I want to add one other indicator to this mix. We'll go back to our 1-year daily chart. Okay, there's our 1-year, 1-day chart. So I'm going to add one other indicator to this mix as an indication of trend strength, and that comes back to confirmation and trend alignment and signal strength. So I'm going to add in this ADX. Some of you have probably used ADX before. ADX is simply also created by Wells Wilder, a trend strength indicator. And the trend strength indicator in the ADX simply says this. Yeah, Ocean Life, you had it right there. ADX says when the ADX line, whether the stock is moving up or down, doesn't matter. When that ADX line is above 25, that's a stronger signal. That's a stronger trend. When it's above, say, for instance, that 70 level, that's an extreme condition with that trend. But so generally, when we see that the ADX, what we could maybe make the argument is if this is 25, we've only had a couple of periods where we're in really a strong uptrend. So we might wait to take that trade until we get that confirmation of those two. That could be a potential confirmation tool. All right. And keeping in mind those market events. So indicator reliability, confirmation, maybe using something like the ADX as an additional tool to help answer that question. I just want to get to this. And now we're saying, well, wait, I've got 3 technical indicators on here. Yeah, we do. But we're purposeful in choosing those 3 technical indicators because they give us an indication of trend or indicator reliability. They give us confirmation to the primary signal. They make sure that our trend is aligned over multiple time frames and give us a measure of signal strength. So we get a crossover here or a crossover here or a bounce here or a bounce here, and that ADX is not showing us a strong trend. We might wait. We might wait on that trade. So again, that's just simply another way that we can use this checklist, right? Yeah, ADX above 25 to confirm the strength of the trend. Now what we can do is we can continue to add to this mix, right? Oh, yes, absolutely, Alan. Great synthesis of this discussion. So if you're looking at something like, let's go back to our eBay example, EBAY, all right? And if you're looking for a sideways move and you see a sideways ranging RSI, you see moving averages that are whipsawing, and you see a low trend strength indicator from the ADX, that might be a neutral movement scenario, right? Here's the reason why, Siri. 14 for the ADX. Wells Wilder, not to get too deep into this, but Wells Wilder was a commodity trader, and he was a grain commodity trader, and he realized that grain commodities moved on a delivery cycle that was governed by 28-day lunar cycles. What's half of a 28-day lunar cycle? 14 days. What's half of a 14-day cycle? 7 days. So oftentimes you will see Wells Wilder indicators measured in 7, 14, 28 as indicator lengths. And by default, he generally went to half of a lunar cycle with his technical indicators. So that's why you'll see most Wells Wilder indicators being 14 days as a default. That's the reason why. We could go on for a long period of time with that. But all right, so now that's what we've got. So here's what I want to do before we get away from this discussion. I want to come back to this one right here. CELH. And I was kind of waiting on this one because here's what's going on. And kind of putting all of this into the pattern, right? Or into this checklist, right? Indicator reliability. Well, we've got a short-term uptrend. Both of those lines, the 40 and the 20, are moving higher. And if we were to look at them across different time frames, let's go to that 5-day, 5-minute chart, that's starting to move higher as well, right? So generally it's been moving sideways, now starting to move higher. So time frame agreement, let's go back to our 1-year daily chart. What's going on with our RSI? Is it above 50? Let's draw our line here again, right about that 50 level, right about there. It's above 50. And what's our trend strength doing? Is it above the 25 level? I'll just kind of draw that 25 line in here for that purpose. So here's what we have in terms of this entry signal, right? In terms of this entry signal. And I'll just kind of draw this in with my magic marker. We have a crossover. And it's not one that we necessarily have to squint at. We might have to zoom in to see, even though but that's still a strong signal, right? It's not a, did it bounce? Did it cross? Is it crossing? And it did it a few days ago. So we've got a little bit of confirmation. So indicator reliability, right? Confirmation. We have the RSI above 50. We have the ADX above 25. Trend alignment over multiple time frames, yes. And do we have a strong signal? Yes. What do we have out here in the future? We have an earnings announcement. What do we have behind us? We have an earnings announcement. So do we have any market events that are driving the signal? No. Do we have market events that we might be concerned about? Yeah, out there in the future, but it's not driving our technical signal right now, right? So we might say we're a little bit late to this signal, but now here's the thing. Here's what we're going to do. There's one other factor, and that goes back to confirmation right over here. And that confirmation, part of that confirmation is what's price action doing right now? We'll zoom in. Price action right now is running into a horizontal resistance level. Above the 50 on the RSI, above 25 on the ADX, crossover on the moving averages, and that probably was our signal a little bit ago, maybe right here. But now we could say the next signal that I'm going to take in this particular case is a break above this resistance. We'll call it 35.95. So I'm going to right click and I'm going to buy, but I'm going to do it with a buy stop instead of just a buy order, just a buy market. I'm going to say, fine, buy it, but only if this last condition is met, 35.95. So I'm going to make that a stop. Now remember, a stop doesn't guarantee where the price is going to get filled. It just guarantees our activation price. So this says stop, wait until price gets to 35.95. We're not there yet. Then put the trade in, send that trade off, and I'm going to put this in our stocks group here in this particular case. So what we've done, now we're waiting on this trade. That's an example simply for illustrative purposes of how we might coalesce all of this idea. Indicator. So you might write these down, and I'll post these and actually I will put these on X, on my X handle at Ben Watson CS. Connie's is at Connie Hill CS. But indicator reliability, confirmation, trend alignment, signal strength, and market events. Hopefully that gives you an idea of how you can evaluate an entry signal and some checklists or criteria that you can use to make a decision about getting into a trade, or likewise flip this over, getting out of a trade. My hope is that this has been helpful. We could spend all day long doing this. We could spend a lifetime doing this. In fact, the 20 years that I've been teaching this stuff, I've just scratched the surface. And so Mike asks the question, do I have a list of favorite indicators? Over years of coaching, you've just seen 3 of them. Moving averages, RSI, and ADX, but they're not the best. Guys, thank you so much for your help. If you want to learn more about technical analysis, jump over here to schwab.com/coaching or to our Trader Talk webcast page. And in the search box right here, just type in technical analysis or trading signals or entry signals or exit signals, lots of different tools that you can use to gain that information. So some good stuff, hopefully, that you can take away from this discussion. I'll put this up one more time. Indicator reliability, confirmation, trend alignment, signal strength, market events. That's your checklist. And hopefully that will be helpful for you in making a decision about entering and exiting stocks. Guys, thanks very much for being here. Thanks to Connie Hill for helping out. And thanks to my great production staff for keeping the stream going out the door. Have a great day, everybody. Please fill out that feedback survey and click on subscribe and like if you haven't done so already. We'll see you guys again very soon. Take care, everybody. Bye-bye.